All right, guys, how's everyone doing? Welcome to Stocks and Coffee with Paul. A lot to talk about today. We're going to go over this pretty quick here, but let's start with the market analysis here. We have had a pretty big reaction yesterday to Fed Chair Powell talking at Jackson Hole. You can see the headline here on CNBC. Powell warns of some pain ahead of the Fed's fight to bring down inflation. Market didn't like that. The morning had actually started pretty good. If we go to the intraday here, I'm going to pull up the S&P 500. You can see this ugly candle here. If we look at the market in the morning, it was actually pretty strong. And then after Powell started speaking, we had this big move down. The inflation numbers were actually better than expected. So the market liked that. Of course, and when Powell starts saying things like pain ahead, and then he also talked about not expecting rates to come down anytime soon. Market didn't like that. We got the big move down. And as you can see here overall, pretty negative here. This is one of the biggest down days we've had in a long time during a period of a lot of big down days. So not good for the market. The question is, what do we do with this? And for the most part right now, the best thing to do is be cautious. But let's analyze what's going on in the market and what we should be looking for and how we could potentially react going forward. So we know we've been talking about this for a while. You guys probably have seen me on other stocks and coffee for a while now, and the weekly swing reports, and you might be also a Bulls on Wall Street swing member. But we have this overall topping pattern here. You can see if we think of an inverted head and shoulders, which is a topping pattern that looks like this. You have a left shoulder, a top that forms in some way, and then a right shoulder, and then the down move. And then you get these dead cat bounces on each leg down. That's pretty much what we've seen here, right? That's essentially drawing out what has happened in the market. We look at the market here. Here's the left shoulder. Here's the top. Here's the right shoulder, and then we've had these bounces have all failed, and we've been in this downtrend. Now, for a while, what was interesting here is in downtrends, you tend to have lower lows, as we could see here. Each low was lower than the previous low, and lower highs. Each of these highs was lower than the previous high. But this bounce was so powerful recently that we formed a higher low here, this low right here, and a higher high. This high took out the previous high. So we were saying maybe there's a change in trend. Maybe the character of the market is changing. We're going to talk about market breadth in a second. Market breadth was actually very strong as well, and we had a good earnings season. But not unexpected, we stalled at the 200-day moving average, and what we were waiting for is some consolidation and then a break. But as you can see, that might be out the window right now. But what tends to happen with Fed meetings is you get that initial reaction, and this maybe wasn't a Fed meeting, but it's Jackson Hole and Powell spoke. But you tend to have an initial reaction, and then the question is, what's going to happen after that? Sometimes they reverse very quickly, even when they look really bad. Other times it starts a move in whatever direction that Fed meeting took. And it's hard to predict what's going to happen here. And we've had with the Fed meetings, the past 4 or 5 Fed meetings, we've had some of that where some of them start a leg down, other ones have reversed very quickly. So that is what we are looking for as we head into next week. What does the market do in reaction to this? Not the one-day reaction, but going forward. Sometimes we get that negative reaction and then we rebound very quickly. Or is this just the start of another dead cat kind of bearish move down? And we'll find that out next week. So what we're watching for here is one of two things to get bullish. That's if we pull back a little more to the 50-day moving average, which is rising. And that's a good thing. As you can see through this downtrend, the 50-day moving average has been sloping down, started to kind of flatten out, but never really did rise, right? Now it's actually rising, which is a good thing when you're playing bounces. So if we pull back a little further and we see a strong bounce at the 50-day moving average, we could take some shots here. But what we really want to see is the market get up over the 200-day moving average. If you can do that, we can start to think about getting more aggressive and getting bullish here. That's what we're waiting for. And if that happens, we start to invalidate this topping pattern. But it hasn't happened yet, and we can't make any predictions on this. And then to the downside, if we break below the 50-day moving average, that's essentially setting up really another move down. And maybe this candle already did that, but it's so reactionary to Powell and the Fed that we should probably wait a little bit. But if that happens, we're looking at the next leg down. So that's what we're looking at right now, caution, and just waiting to see what signals we get. This was a powerful bounce here, and usually these powerful bounces have some more legs. So we'll see what happens here. And our question now, is this bounce failing? And we'll find that out rather quickly next week. Market breadth. Let's just look at the T2108 here. I will say it was a really good earnings season. So that's something to pay attention to. In a bearish market, if you have a good earnings season, that tends to be good. We can see here market breadth is very strong. This T2108 indicator stocks above their 40-day moving averages, and look at how strong it is here. Now it's pulled back in the last few days with the market pullback, but still very strong at the highs here. So market breadth is still pretty good. We'll see what happens to it going forward if the market does pull back. Now we've been talking about earnings season. It has been a good earnings season in two ways. One, price action has been good. In another way, we've had a lot of companies maybe not posting the best earnings and sometimes even warning with guidance. And yet price action has been strong, even in the face of some warnings. And if you look at some of the stocks we're tracking here, you can see now some of these have pulled back now with the market, but this was Yelp's breakout here. This was Chipotle's breakout here. Now it's pulled back, but we're seeing a lot of this. Here was PanW's breakout here. All these stocks, CWH broke out, and you can see where it is now. DEC broke out on earnings. And a lot of these things went from bottom formations to continuations to now being above their 200-day moving averages. So we're seeing a lot of stocks like that. Here's Apple, had a good earnings reaction. Look how far Apple went. I believe their earnings was right here, or maybe it was lower, but somewhere around here. I think this is at the gap up over the 200-day moving average. Very strong. Obviously, it's pulled back here with the market, but we're seeing a lot of stocks that have done this. So we've got a lot of breakout stocks, a lot of stocks we're watching right now post earnings. We've been keying in on one of two things: growth stocks that have kind of bottomed and continued. That's one of our key setups here, or stocks that had good earnings and are breaking out now. So pay attention to those stocks. Have a list of stocks that did well in earnings. You can see I've got a list of about 40 here. I actually have about 20 more to add to this, but you should find a good 50 or 60 stocks that had good earnings breakouts that are ready for their next kind of legs going forward if the market cooperates. Okay, now what industries should we be paying attention to? We've got 5 industries here I've listed. One is commodities. That's actually a bunch of industries here. Let's look at energy and metals. If we look at energy here, we find that we see a little bit of red yesterday, but we actually had some green yesterday too. But look at these patterns here. If you look at all these stocks, they essentially had huge runs in 2022, a deep pullback, and now continuation patterns. And they have been very strong. They look like they might have been failing, but now they're coming back. So definitely energy is in play. You can see the stocks that we're tracking here. You can also use the ETFs, XLE. You're going to see the same pattern, and the leveraged ETF, ERX. All really good here. And then metals and agriculture. So let's go to metals and commodities here. You can see even things like wheat, corn, maybe not wheat, but corn. This is very similar to energy here. You have the big run, the pullback, and now look how strong it is. Corn is not something I'd usually trade, but these commodities have been patterns have been so good that we've been considering these. Here's soybeans, coffee, very strong, almost at highs here with coffee. And then if we go back to our stocks, here's agriculture. Agriculture very strong right now. MOS. Chemicals also very strong. You can see SQM is near all-time highs. Maybe not all-time highs, but at least recent highs. And then we've got the metal stocks, which had taken really deep pullbacks here and now are coming back. Some of these are above their 200-day moving averages. The ones that are not, I'd probably wait to see if they get up over those levels. But commodities in general should be watching these things. Financials. Let's pull up XLF, the financials ETF. Look very much like the market. I would consider these if they break out over the 200-day moving average. You can do something like FAS, the leveraged ETF, or go with one of the big banks. like Goldman Sachs above their 200-day moving average, Morgan Stanley. You can see these are actually showing a little bit of relative strength to the market. They're actually right at their 200-day moving average, or you can go with regional banks like something like Zion here, and there are a number of regional banks that have been strong as well. Let me see if I can pull up a few stocks. Looks like I got rid of that list, but there are a number of regional banks that have been strong as well. Now, growth, we can look at it. Growth is a very big kind of area of stocks. Essentially, we're looking at lower float, tech, younger stocks, maybe some IPOs. A couple of ETFs I like to look at to assess growth. One is IGV, which is software. That's going to be full of growth stocks. And you can see here, this IGV ETF pretty much lays out the pattern we've been looking at for bottom formation continuation. You have this bottom formation that's formed. Good money flow. This is a money flow indicator we use. It's been very strong. You can just look at the volume here as well. Broke out of that range and turned into continuation pattern. Now, a lot of the growth stocks are actually above their 200-day moving averages. Some are below and have pulled back now. And the question is, are they going to go forward, much like the market? But we're watching growth very closely. Another ETF you can use is ARK. And you can see here pretty much the same pattern. On TC2000, if you click on this, you can see the stocks that make up these ETFs, and they're all full of this type of stocks we're watching. We keep our own lists as well. So I've got a software list here, and if you go through, you're going to the same patterns here. And you can also keep an IPO list, and we've got a big list of about 200 IPO stocks that we track as well. And a lot of these are putting in those kind of patterns as well. So definitely be paying attention to growth. And of course, we're always paying attention to big tech. So the Apples, the Googles, the Teslas, and you can see here, a lot of these have made nice runs and now are pulling back. And essentially, we're going to wait and see what does the market do and then trade accordingly with these guys. Amazon, if this thing gets up over the 200-day moving average, I think it's a really good play. Apple has been showing relative strength. If it pulls back to the 200, you can see Amazon's below its 200. Apple is above. Apple has been showing relative strength. If this thing can find support here, obviously, we'll be paying attention to that. And then AMD here, same thing. Most of these, Facebook we're staying away from. This is just an ugly stock right now. Netflix actually had good earnings. We traded it once profitably, and now we're looking for it to pull into the gap here, and that could be a good setup for Netflix. So pay attention to big tech as well. And then retail. Now retail covers a lot of different types of stocks, with clothing retail, auto manufacturer, auto stocks, specialty retail, some of the smaller type of retail companies. So here's XRT, a retail, has a lot of different kind of retail stocks in here, but we can see a similar pattern to growth. So these things have a lot of room to run to the upside. So we're definitely paying attention to retail. Here's one of the stronger ones, Ulta. You can see this one is not even a bottoming formation. This one is relative strength stock up at its all-time highs. If we look at DKS, Dick's Sporting Goods, you can see how strong this is. It bottomed here, already up over the 200-day moving average, showing relative strength to its industry. So very strong here. We've got some other stocks here. We'll just pull up DEC, which had good earnings as well. And you can see the same pattern here. So I really like retail. Might be my favorite out of these right now with some of these setups in retail. Okay, let's quickly go over the two setups we're really keying in on. You've seen them here as we've been going through these. Bottom formation continuation. Essentially, what we are looking at here is stocks that have put in, like, see, this is a downtrend here. They put out sometimes bottom formation. They've broke the bottom formation range, and they're in continuation patterns that have now pulled back. And the question is, are these going to find support here, or are they kind of done with the market? Is the market going to decline? If we assess the market and say we're ready for that next leg up, these are all really good stocks to trade. There's so much room to the upside on these things. These things have been so beaten down, and a lot of them are actually quality stocks. So these bottom formation continuations in growth and retail, really keying in on those. The other thing is the stocks that broke out on earnings. So, you have a stock that was trading in a range. It broke out on earnings. Maybe it ran post earnings. Maybe it pulled back. There's going to be some kind of consolidation, and the next breakout, we're looking for that. And if we get that, we can enter one of these breakouts. That's essentially all we're looking at right now in terms of setups. Either the earnings breakouts from this last quarter, and you saw the list we had there, or these stocks that have bottomed and now are continuing and pulling back. And if they're ready to start the next leg up, and we use some of our market analysis to assess that, then we can get into those. Okay. All right. So we've gone over the market, we've gone over earnings season, we've gone over the industries we're interested in, key setups we should be aware of. In terms of weekly stock focus list, I just went over a bunch of stocks, so I think that's pretty good. We've got about 50 stocks we're watching over at Bulls on Wall Street. If you're interested in more, first of all, I do these stocks and coffee about twice a month on the weekend. So obviously, I'll see you guys in a couple of weeks. The weekends I don't do that. I put out a weekly swing report that you guys will get on the Bulls on Wall Street YouTube page. And I think if you're on the email list, you get them there as well. So be sure to join that. And if you're interested in more, there is the swing service. You can see here, this is Friday's report. A little summary here, but the main thing is the video. And then we also have the Discord chat group as well. We're posting this every day. But otherwise, of course, you guys have the weekly swing and the stocks and coffee we'll do in a couple of weeks. You can follow me on Twitter. I post there almost every day, and I post stories on Instagram almost every day as well. All right, guys, great session. I will see you guys either on Monday if you're in the swing report, or next week with the weekly swing for everyone else. Talk to you guys soon.